Okay, hey guys, I'm Tyler Jeffcoat. I'm the CEO of Seller Accountant, and we're going to put together a series here to talk you through how much does e-commerce accounting cost? I mean, right, your business gets to a point where your financials need attention, and the real question that sellers or other, frankly, other business owners have often is, how much money is it going to take? What are the resources that are going to be required for me to get my accounting in order so that I can control my business better? And so this is going to be a four-part series. I want to really go in depth because it's important to me that I explain, kind of be transparent with you about what drives cost, what your options are. And I think where I want to start with this first video is just talking about what makes e-commerce accounting different. Like what do you have to do to get it correct? And so if you're going to try to compare apples to apples, you want to make sure that you are comparing options that are actually getting the job done correctly. And so, what makes e-commerce accounting special is that it has an unusually long cash cycle. That means you're placing bets on inventory generally long in advance of actually getting that money back, of getting to sell it. And the data that is coming from your payment processors or channels like a Amazon or Shopify site, PayPal, eBay, Walmart, etc., that data set is unusually complicated to deal with. And so because the cash cycle is longer, it is more important in e-commerce than maybe it is in other industries to have a clear understanding of how your profitability is trending and whether you're actually making money each month. But because the data is weird and it's coming out of these, for instance, Amazon's in every 14-day cycle, but it gives you a single deposit that might include everything from refunds to Amazon loans to advertising. So it's important because I'm placing bets in advance, but it's hard. And so the combination of long cycle and difficult data makes e-commerce accounting really kind of a unique monster. And there's a reason there's a few firms like mine, like Seller Accountant out there that have really decided to sink our teeth into it and do it exclusively. And let me just give you a couple of those kind of specific specialities. One, I kind of alluded to with the payments. If you get a deposit from Amazon, one of the worst mistakes you can make is just to hit add into your QuickBooks file. You're going to be ignoring the impact of sales tax, of logistics fees, of commissions, of refunds, of promotional, promotions and discounts that you've given. There's even a lot of our Amazon accounts will have advertising baked into that same deposit, and they might even have an Amazon loan payback. And so if all you're doing is hitting add and not taking the time to split that deposit out properly, boy, you are really setting yourself up to not have the visibility to understand your profitability. And since you're having to spend the cash so far in advance, it's a real recipe for disaster in the e-commerce world. And so splitting sales is a really critical piece. The other part of this kind of double-edged sword of e-commerce accounting is just the cost of goods sold inventory. You have to have a more sophisticated way to track your inventory purchases, to put them on the balance sheet as inventory on an accrual basis. And then as you actually sell the units, expense the correct units so that you can really see side by side whether you're making money, right? So you've got sales, you've got COGS. Advertising is such a critical driver for our CFO clients at Seller Accountant. Understanding how much fuel is required in the form of advertising to get a portfolio of products to move is just so critical. You can't afford to lump it into that same deposit. Obviously, you're going to have overhead and other expenses, salaries, software, rent, that kind of thing. But then there's other kind of uniques that go into e-commerce, like sales tax has to be dealt with in most of the states now. Any kind of receivable from Amazon or Shopify or PayPal. And then the kind of frequent inventory funding. You might have specific loans for funding that inventory. You may have a more complicated accounts payable where you're paying a 10% deposit, and then you have when they ship the product from China, you pay 30%, and then you pay the balance, a net 30. These complex AP terms that are on multiple POs and multiple product orders, that again just kind of all wraps into e-commerce accounting just being a little bit more complicated. And so your normal accounting or bookkeeping partner, whether it's somebody that you would hire or a VA you might pick up, they're going to be really, really good at taking a feed of transactions coming out of your checking account and your credit cards and clicking add and making sure that those accounts reconcile so that you have that kind of I'm not losing money feeling. But in terms of actually putting those expenses and revenues in the right categories, we call that classifying correctly. And then in terms of making sure that they're split into the correct months, your normal bookkeeper, even a lot of your CPA firms are going to be really weak at taking these complex data sets out of Amazon and doing that correctly. And so, again, obviously we're biased here, but we just highly recommend making sure that you partner, whether it's with a hire that you bring on internally or with a firm like Seller Accountant. We highly recommend that you partner with a team that is intimately familiar with how to take that long cash cycle and that complex data set and actually do the accounting correctly, because the difference, frankly, can be life and death for a business that has this kind of risk sitting in inventory. It's absolutely crucial that you understand where your money's going. And so I'm going to talk to you about some additional drivers of cost for the accounting, and then we'll talk about price here over the next couple weeks. But thanks for tuning in. Take care.